Good morning, traders. This is Christian Kerr, Senior Market Strategist at DailyFX.com. This is my idea of the day for June 30th, 2014. All right, today I'll be looking at dollar Canada. Now, I think over the next few days, or the next few sessions rather, the exchange rate is prone to a reversal, potentially a sharp one. Now, while I like to stay on the same side of this trend as much as possible, there are times like this where I think the risk reward of the situation warrants maybe trying to go against it. There are a few reasons why I think a reversal could be in the cards. The first one, and I'll actually draw them out for you, is a confluence of support coming up. Confluence is just a fancy way of saying a convergence of a bunch of different levels. And in dollar CAD, it looks really quite powerful. So if we go back to this low back in 2012, we've basically been trending higher. So if I take a simple Fibonacci retracement and draw it off this low to the March high, we'll see that it comes in right around 106.30 thereabouts. We do another one of these Fibonacci retracements from the last September low. We'll see the 61.8 comes in right around the same level. So now we're starting to see a bunch of levels coincide with each other, which is something I look for a lot. Now if I zoom in a little bit, and I do what's called a Fibonacci projection, or just simply a measured move, cancel that, it happens sometimes. So I just do off the March-April decline. You'll see that coincides right around 106.50 as well. So we're starting to get a lot of levels. This is the measured move of this March-April decline. So we're starting to get a lot of levels that coincide there. Now, if we take into account that 106.40 was the open for the year, it's another level of support. I do a lot of work with square root relationships, which is a Gann concept. If we take 6 square roots off the year's high, that comes in at 106.40 as well. And the last kind of major bit of support that I see here is if we go back and draw a simple trend line from this 2012 low, connecting some of the more important lows from here, you'll see that this coincides with this zone we're looking at. So I would label this zone probably about 106.50 to about 106, to where I'd look for price to actually confirm and kind of try to reverse from this level. A couple other factors that I think kind of support the case for a turn here are cycles. I do a lot of work with cyclical analysis, which is a fancy way of looking at it. I look at the bottom axis of the chart of time, and it just suggests to me that this is getting a little long in the tooth in terms of the length that it's been going on from a cycle basis. And probably the last key factor I would say is this. This is a seasonal chart of the Canadian dollar over the past 30 years or so. And we'll see if you look right here in July. July tends to be the worst month for the Canadian dollar to be bullish dollar Canada. So we kind of have all these factors that are kind of pointing to some sort of reversal. I would think in the next few days. The one thing that would change my view here is if we do smash through this support zone and manage to actually close below the bottom end of it, right around 106. So a close below 106 would suggest to me that that this trend is still very powerful and likely to continue to head lower. But that's kind of what I'm looking for on the next day or so, to see if price action starts to support my view and confirm what I'm thinking. If we get some sort of reversal here, I'll personally look into maybe trade this in the long side. Good luck, profitable trading. It's Christian Kerr signing off.